Hi, I'm Carl Weisecker, Principal Broker at Klein May Realty, and I'm joined today by Keith May from both Klein May Realty and Cottonwood Commercial, and we're going to talk a little bit about what's going on in our real estate market, both residentially and commercially, as of the end of September of this year. So, Keith, thanks for joining me.
Thanks for having me.
As always. In the residential world, it has been a slow year, honestly slower than what I expected. The numbers as of the end of September are looking like we're down about 25% in Rockingham and about 20% in Augusta counties. Prices still keep going up, which is amazing, but prices are up about 10% in both Rockingham and Augusta counties. And the really interesting thing to me is the price gap between Rockingham and Augusta has almost completely narrowed. 6, 7, 8 years ago, there was about a 15% difference. And now the average price in Rockingham County is $336,000 and the average price in Augusta County is $332,000. All of that, of course, driven by the high interest rates, and that's managed to kill both supply and demand all at the same time in the residential world. What's happening in the commercial world, and what are the big pluses and minuses going on there?
Well, just as interest rates are the challenge in the residential world, it is also creating some challenges in the commercial world as well. So it's all about interest rates. So whenever you could buy apartment complexes at 2 to 3% financing, and when you tried to buy them now at 8% financing, it just kills a lot of the deals that we would have made years ago. So that's the bad news if you're a buyer presently, but I think the impact on the market is going to create some potential opportunities in the long run for buyers. And whenever some of this interest rate is coming up for repricing for some of these sellers, that if they have a very tight margin in their equity, they may be wanting to sell at that point. So it could be some opportunities for buyers in the long run as well. So the market's going to just have to sort of filter itself out.
Right.
But when you're looking at commercial, you're looking at a couple different sectors of that market, and that's a problem nationally. Now granted, locally we're not as impacted as much as what the urban areas are. But if you look at San Francisco, New York City, some of the larger metros, they are struggling significantly with about 50% occupancy in their office market. People are still working from home, and that's creating a downward pressure in terms of office. But some of the other sectors like industrial, a lot more people are buying online. That means we need more warehouse, more storage areas, and that's been pushing up industrial. So the industrial sector has been going up as much as the office sector has been going down.
So at the same time, we have empty office spaces and we have folks who can't find affordable housing. In some of these larger areas, are there developers working with the cities to turn some of that office space into housing?
Absolutely, that's happening, and that's happening a lot more so in the urban areas, but there are a couple opportunities locally that they're looking at doing the same thing. But it's not cheap to convert, so it's almost just as expensive to convert it is to build new. So it's still a challenge, but it is working out in some situations.
Great. All good news, I think. Despite the slowdown, I think the long term is still very bright for our area.
And every day as the Washington, D.C. metro grows, every day we get closer to that metro, and that also helps push because it makes the commute less. So I think the whole valley is going to benefit.
Right. I agree. Thanks so much for joining me today, Keith. Always great insight on the commercial world, and thank you for joining us and tuning in once again. That's the market report as of the end of September 2023. We'll see you next time.